everyone, and welcome to this week's edition of StockCharts TV. I am your host, Mish Schneider, and I always like to thank StockCharts for giving me this opportunity to spend up to 30 minutes with you each week, showing you charts and stocks to look at. This week's theme is going to be on bottom-picking stocks, because after a deep correction, we now have some really interesting setups with low risk. We'll look at the parameters from everything from the macro to the shorter-term setups to the risk and reward. Okay, so what I said I was going to start with was the macro picture, and I think it's really important for you to see how I manipulate the stock chart screen to get the information that I seek. This is the first intermarket strategy that I like to look at for the macro, really is the junk bonds versus the long bonds or the TLT. Because if the junk bonds, even if they're selling off, are still outperforming the long bonds, what that tells you is the high yield debt, which is what junk bonds are, is proving that there is, regardless of a downturn, still risk appetite or not. So right now we have the real motion and the leadership indicator set to SPY. I'm going to go in and I'm going to change that leadership to looking at it versus the TLT. And when I do that, you see just another one comes up. But the bigger point to show you is that even when this was coming down, we still were well outperforming the long bonds. So not only was risk appetite showing you that this dip was still relatively buyable, and this, by the way, goes back to September, never really broke even on this move down, but it also shows you that even though TLTs had a little bit of a rally, that flight to safety that TLTs represent never really happened. So this was another one of those scares. And of course, if you listen to the media, you're always going to hear the scary stuff, market's going to crash, yada, yada, yada. But this is an incredibly valuable lesson for you not to get caught up in all that media BS and really just follow these great things that I'm about to show you that you have the ability if you actually own these plugins, which I really always highly suggest you get because they're so incredibly good for this type of information. So the next one we're going to go to here is going to be the TLT, the SPY versus the TLT. So right now, the same kind of thing. We have, go back to the leadership, put this in versus the TLT. And what does this show you? That during this correction, actually, the SPY started to underperform. So it got a little bit scary, not with the junk bonds, but with the SPY, it got a little bit scary in that it started to underperform the TLTs here, which meant that for a minute during this period of time right here, it could have gone either way. So that's why it's good to have all of these three lined up together. As of yesterday, when I looked at it, it was actually sort of on par. It became more neutral. That was yesterday right here. You can't really see because it's kind of gone up there already. And now, of course, you can see that right now what's happening is that the SPY is definitely outperforming the actual long bonds. That's a positive, right? Because remember, long bonds flight to safety. Now, of course, as we're looking here at this chart, we can see that we've rallied right into the resistance here at the 50-day moving average. Whether or not that turns out to be significant remains to be seen. By the time you hear this video, the jobs number will come out. And of course, we know that the debt ceiling has at least been kicked down the road to December 8th. And that's why the market's taking a brief fresh air here. However, and this is nothing to do with the bottom picking, but it has everything to do with the bottom picking, is I still maintain that we held close to the July low, and that probably means that we're still very much a range-bound market. I'm not expecting any new lows or new highs anytime soon, and that's why this bottom picking idea today could be very valuable for some short-term trades. Now, if we go back to this, get rid of this again, and now look at our last chart here. In terms of the market relationship, I like to look, and I'm going to just change this relationship right here back to SPY. So you can see I'm manipulating all of this so you can actually really see that. And by the way, the number of deviations on this is still 1, whereas if we go to real motion, you can see that my standard deviations are still 2, and I'm not going to get into all of that because I've covered this already. But more importantly, if we look here, not only did we have that mean reversion that we talked about, although the price didn't really follow through, so it was cleaner down here, but we actually then saw that the IYT, which is the transportation sector, which I think is extremely important to the whole picture, started to outperform the SPY, and it's still outperforming, which is good. As long as that continues to maintain, I don't see any major warnings. However, if we look up at real motion here, this is above the 50-day moving average in price and above the upper Bollinger Band. We'll get back to that in a second, but it's below the 50-day moving average here in terms of the real motion and momentum. What does that tell you? The momentum has improved, but it is still in divergence to the price, which means exactly what we're talking about here. This is a good rally. It's certainly a relief rally. Market looked like it could have gotten a lot worse. But again, because of that macro intermarket relationships, we knew at least it wasn't the end of days. But is this exactly the roseate picture that many bulls hope will take this up to new highs? We don't know. What we know right now is momentum is still declining here in this key relationship, although it's still outperforming. And we also know that it just rallied over the Bollinger Band. But as I showed you with mean reversion to the downside, to the upside, if it breaks down under that Bollinger Band, then that could tell you that that was it. Then we'll be looking at around that 250 to 252 to hold up as we close this week out. So I hope that kind of gives you the good idea in terms of these longer term macro relationships. It's very good to have some level of, the word I keep using over and over again is context. People say buy the dip, they have no context. They say just keep buying on the way down. Well, is that buying the dip or is that buying a falling knife? Context is key, and never have to worry about finding the exact bottom. But I am obviously going to show you now some really interesting setups of stocks that are in good mega trends, but were beat up and possibly gave you unbelievable opportunities to buy. Okay, so let's go right to that first stop. Now, of course, we didn't really talk about the short-term setup, so we're going to talk about that as I go through each of these charts. But essentially, here are the parameters that we have, and you'll see this in the PowerPoint when it gets put up, is we have the reversal pattern, which is the new 60+ day low, reversal from there with a confirmation. We have the mean reversion, which I've been showing you with price Bollinger Bands and with real motion Bollinger Bands. Then we have the return over the moving averages. These are all different ways that I like to look at something if the macro lines up for things that might have bottomed. Of course, again, not just any old junky stocks that have now been beat up, but something that matches some fundamental megatrend that I think could emerge or is already emerged. And then, of course, we have to look at risk, but that we always talk about, and time frame, which means, are we doing it as a day trade? Are we doing it as a mini swing trade, 2 to 3 days, or something longer? And that I will talk about as we go through each individual stock. So we're going to start with not this one. Sorry, I forgot the A there. This is BABA. And so with Alibaba, obviously we know that there has been tremendous amount of slack from China, President Xi, towards Jack Ma and this company trying to break up the monopolies, et cetera. So from a fundamental standpoint, this got beat up. However, whether it's because of the fact that you're now reading that Biden is more willing to play nice with China, and that could have helped, or maybe it's all priced into the market. It doesn't matter because we're price followers. But what we did see here was a new 60-day low right here. That was a few days ago, and now followed by a move higher with a close above that day's high. So this would not have been a mean reversion trade. Why? A mean reversion trade looks more like this, where it breaks down under the Bollinger Band in price and then comes back through it. And that did not yield very much. That's why you have to have some sense not only of the macro picture of the overall market to see how much you're going to get, which of course would then determine your time frame. Maybe you would have done this for a couple of day trade. But now that things are looking a little bit different, this was no longer a mean reversion trade, but rather a reversal trade. Follow through yesterday, big gap up here today. Now, let's see what's going on here. Starting to show a leadership a little bit against the SPY. So if the people are asking the question, has Alibaba bottomed? We could say, well, certainly the momentum is behaving. The leadership is showing some signs of strength. And it had a really good bottoming pattern. So what would you do at this point? Certainly a risk all the way down to the low might be too much. This is where you have to determine your time frame. If you wanted to catch a bounce in BABA and you believe that the worst was over, you could use the resistance here at the 50-day moving average, or you can even use the resistance of the last time it popped. So it would be somewhere between 168 and 178. And so what I would probably be doing is I would have been a buyer today over 150, maybe probably over 152. I probably would have put my stop somewhere under 148. I don't want to risk much, right? Somewhere like $4, because what I'm looking to do is at least go 2 to 1. So that means I want to make at least $8. So it gets to 160, looks probable, more probable than 168 or 175, but you never know. And then as you get more, you actually then start to raise your stop to no loss, et cetera. So this one is actually a really interesting bottoming play. And of course, well, Alibaba is still a huge company. Now, the other one that I really am interested in here is a stock that was super hot a few years ago. This is Bluebird, and it's in the biotech space. And what's interesting is the biotech space had a little bit of a correction here. In fact, it was the one sector that broke down under its 50-week moving average. And now, of course, we can see that along with the market, this has an interesting pattern potential. So let's go through what I'm saying in terms of, we already know the macro is set that it's possible the market goes higher. We did not have a mean reversion trade in this one at all. This just went sideways. It was never really clean, and nor do we have one here. However, we did have a little bit. This was a new 60+ day low right here. Let me just make sure that's true. That's 1714, and that's 1717. So yes, that was a new low. And then the next day, an inside day followed by a higher close the next day. So that really became your initial risk there, if you were so inclined, under 1714. And if not this particular stock, just a formula to use. But now look what's happened here. This 50-day moving average has come all the way down, and we have not been above it since June. So now at this point, what's showing here is momentum is over the 50. We have a positive divergence in momentum, which tells me that Bluebird could get exciting again. So at this point now, what we want to do is we want to not only make sure this holds over the 50, but also look at our leadership here. It's also starting to show a little leadership against the SPY, right? So this is very simple. To me, I would look for a 2-day confirmation over the 50-day moving average. Even if you wind up paying up over 20, at least you have a better opportunity to not get chopped up and possibly catch a move to fill the gap up closer to 24, 25. And when that does, and if that does happen, where this goes 2 days over, then you would use somewhere around that 50-day moving average as your risk. Now, the next one is a company that I really, really like, and I've watched this, I've made money in it, I've lost money in it, I've traded this thing in and out, and I haven't touched it in a while. And this is Origin Agritech. I still think that Agritech is the future, no doubt about it, right? So this is a Chinese company, though, so it's obviously had some issues. But then again, we've had some agritech companies, even here in the US, that have not really been performing well at all. So this is what I'll call a mega trend in infancy. So let's look at the bottoming pattern here. So we had made a new low here. So that wasn't a new low reversal pattern. But what we do have is a mean reversion. Not as clean as I would like, because it kind of touched on the Bollinger Band here in real motion, where it broke it down in price and then came back through. So really your day to have gotten interested would have been here. But this doesn't mean you missed the boat. In the bottom picking arena, we are clearing the 50-day moving average here on real motion. We are outperforming on the SPY, and we're sitting right on the 50-day moving average in price. And by the way, above that upward Bollinger Band. So that tells me that, again, simple math, when you're using these phases with a neutral slope is to wait for 2 closes over the 50-day moving average and then jump in. And again, if you want to look at a risk, you have a couple of choices. Of course, you can go all the way down to the lows, or you can risk somewhere, I'd say probably under 790, or you can risk to the low of whatever the low is the day that it finally confirms a move over the 50-day moving average. Okay, the next one is in the cannabis. There were a lot of stocks in the cannabis industry that fulfilled the criteria of a potential bottoming pattern. And again, not mean reversion, because here we broke down under the Bollinger Band. We didn't come back through it though until here, and it was just kind of weak. It didn't really give me any kind of interest at this point. But now, it never broke the Bollinger Band, but we had a new 60-day low this day. This low here was 2305. This low was 2306. So actually our new 60-day low was yesterday. The day I'm talking to you is the day after, obviously. And so with 2305, look what happened today. Now we are gapped higher. Yesterday's high was 23.99. As long as this closes over 23.99, we could have a reversal in the cannabis space. And yet, I like the momentum is increasing. It would be really great to see this do what I showed you before with, let's say, Bluebird, and that's clear the 50-day moving average in real motion, with this still being so far away from the 50-day moving average here. But nonetheless, if this closed on Thursday when I'm talking to you over 24, then you can just risk down to this most recent low and see if you have something going on. And you can use that same formula for all the stocks in that sector. So Biogen is another biotech stock that got really killed. And it was a very similar situation where it did have a mean reversion on momentum, but not on price. So we're not going to look at that. This was another inside day after making a new low. And then 2 days ago, it didn't quite confirm. So it's not as clean as the others, but nonetheless, it does look interesting here as it's holding above all these levels. So with this one, we're not even above the zero line. I would say Biogen, which by the way is a pretty volatile stock when it gets going, would probably be worth waiting for this to clear back over the zero line in your real motion. Maybe get a little bit of a leadership, at least on par with the SPY here in the leadership indicator. And at that point, it's possible that we might be closer to the 200. With this one, I'd almost be tempted to wait for it to clear back over the 200 because it hasn't since it's broken down, maybe around 300. And then you might have a much cleaner signal at that point. So not as good as the other ones I showed you, or as cleaner risk. This is in the, well, special consumer services, but really it's charging stations for EVs. This is BLNK. And by the way, we're also in earnings season, so I always make sure you know when things are reporting. This has been also, this was a good mean reversion trade. It kind of broke down under the real motion indicator here, broke down under price. So this is kind of perfect. And now today is showing that it's going to hold. So your real buy opportunity is somewhere here today. If you missed it and you're now listening to it tomorrow, even if you paid up over 29, it's not too bad if you believe the market could hold. This is the kind of thing with short covering or new buying in a good mega trend that could actually emerge as a winner, especially if in the infrastructure package, if it ever does get passed, obviously EVs are a focus. So like I said to you before, you could wait a little bit now and let's see if this get back over either the 50 or the zero line and a little bit more momentum to show some kind of leadership. The next one is Beyond. This happens to be one of my particular favorites, and I'm probably going to be sorry I'm not in it already, but that's okay, because if it really is bottoming, then you will always have different opportunities. But this was about as perfect mean reversion as you can get. We broke down under the Bollinger Band in momentum, and we broke down under the Bollinger Band in price and came back through it. So this is really the signal today. Now, again, we could say, oh, we can wait till it clears the 50, or we can wait till it starts to outperform. But if you are listening to this and this is already moved up, I would probably say either I'd be looking to buy somewhere between 105 and 106. And if it's that point, it's trading over 110, you still haven't missed the boat on this one, because if this really bottoms, there would be another opportunity. However, I also like the fact that this broke down on a new 60-day low. So you had mean reversion and reversal pattern. And you have a really good risk to under this low. If thing has really bottomed, this is the place it's going to prove it or not. Next one is in the pet food space, which Chewy was the big darling during the pandemic. And now everybody is obviously going back out to stores and maybe not necessarily using this so much to get pet food, but it's still a really good company. So in this case, the low here was 63.42. The low here was 63.47. So we didn't really have any kind of bottoming pattern as far as reversal, but we did sort of have a mean reversion. Didn't quite break it here, but it doesn't have to necessarily always be so perfect. I like to have it when it's perfect, but at least it touched it, broke it in the price, and then came back through. And now you see you can getting some follow through today. With this one, again, no leadership here, just starting to emerge. I wouldn't wait all the way up here, but I would say now, if you look at this bar, this big red bar at 67.26, if it takes out that, then I think you still have a pretty good risk down to the lows. eHealth, I actually also really want to be involved in this one. I talked about this one on Fox, and it's a very thin stock. So if you just go to the market, sometimes it gives you a bad feel. So with a limit order on this, I would say maybe some kind of a move back down to around 43.30 if we get it. If not, now you're almost too close to resistance to be chasing it. But if it does come off a little bit and continues to hold this 50-day moving average, this whole bottoming formation, this mean reversion never really happened here in momentum. It happened down here, but I didn't care about that. But what this is showing is that we had momentum clear the 50 long before this did, while it was going sideways. So we did have a positive divergence in momentum. And we're showing some real leadership here to the SPY. So keep your eye on this one. This is a hot stock. I've liked it for a long time. I just haven't traded it for a while. Okay, next one is FSLY. So FSLY is a tech software company that, again, was a pandemic darling and then fell completely out of favor. Had a very good looking, not perfect, but good looking mean reversion where it touched the dotted line but didn't break through it. But it did break through it in price and came back through, and you can see the follow through today. So I'd keep 40 in my mind as a good area to see if it holds. Obviously, the low here at 36.62 is going to be also important. And you're coming into the 50-day moving average, but notice what's happening here in momentum. It's breaking over the 50-day moving average. So that means you could probably say if it holds 40, maybe it's a buy with a tighter stop, and you can add more if this actually breaks out over and confirms that 50-day moving average, because this is still a good company. Now we're going to move over to the metals. So GDX was another one. This had not a perfect mean reversion because it never really broke it in the price, but it did in the momentum. But nonetheless, here you are having a 60-day plus day reversal that happened here, and now we're finally starting to see some momentum to the upside. Also, look at this, on par with the SPY, which is also interesting. So if there's any opportunity for the metals, for the mining metals, to start going up, this is it. So you have a couple of choices. When you look at these 50-day moving averages and you see that we haven't been through that since June, you can take the very conservative route and just wait for 2 closes over the 50-day moving average. Or you can say at this point, if it holds around 29.75, I'm just going to go in and buy a small position, tight stop, and see if I can't get any traction up to that 50-day moving average. This has not cleared it yet. Or third choice is wait for the momentum to clear the 50-day moving average and then go in. Next one, of course, is gold, because gold, I mean, I can't tell you how many times I'm still getting the question that people are buying Bitcoin, not gold. Does that mean gold is dead? No, it just means gold is sleeping, but I don't think it's dead. Now, in terms of this one, this was a good clean reversion, except for the fact not in price. So you see how sometimes these reversions, they don't set up perfectly. That doesn't mean you don't have to trade them though, because this had this new 60-day low here, and that low was never taken out. So it tried it, touched it, came back through, and now you can see it's trying to consolidate. Now, one chart you don't have here, Let's look at the real motion first. Got right up to the moving averages and backed off. One simple thing to do is just to wait for this to clear the 50 and the 200-day moving averages in real motion, because that'll tell you the momentum is picking up before the price. Also, you want to see this go back to somewhat outperforming the SPY. And then the other thing is what you don't have here on this chart is the 6-month calendar range low that comes in at exactly at 165.50, which is exactly where this stopped on this most recent rally. My plan is to maybe take a little bit of a starter position over 165.50 and then add, excuse me, if I start to see the momentum going up and it takes out its next moving average and next Bollinger Band up around 168.64. Okay, a couple more left. We have EAM. This is emerging markets. So I'm trying to cover the things that have been really out of favor. So this again had a good mean reversion in momentum, but not necessarily in price, but we're getting a nice pop. And similar to gold, we have this really interesting double bottom here around 49.10. Momentum is coming up, but it hasn't cleared the 50. So once again, you can wait to see if that happens. You can wait to see if this leadership increases, or you can just simply say if it takes out 2 days of the 50-day moving average, then EAM and the emerging markets might be ready to pop. Space, not that I think that any of us are going to be going up into space anytime soon, but it's not the only thing that they're doing. And we did get a new 60-day low and a reversal under the price Bollinger Band and back over, but it didn't do it in momentum. So I would just keep an eye on this. On this one right here, this thing can surprise you. Any announcement could come out and it can go flying. So I would say at this point now, I would want to see some proof that this has some legs, which to me means I'd want to see it close, let's say over 25.25 or 25.50, or even just wait for the 50-day moving average, because like some of the other ones I showed you, it hasn't been above it in a while. But again, even if you are a more active trader, you could have been a buyer yesterday on the basis of the close over 22.88. You would have had 50 cents, but again, this is only a $23 stock. You'd be putting in a no loss stop at this point and saying, gee, do I want to carry it another day to see if I can get up to 24.25? And one that actually reported, it's a stock I'm very interested in, and it's actually moving up as I was getting prepared to do this. This is Constellation Brands, STZ. So now this one is now just cleared the 50 at the same time the momentum is and showing leadership. So this has been showing leadership all along to the SPY. Now you're right here at the resistance to this upper Bollinger Band. To me, if this thing now takes out, say, 218, 219, even you want to go round numbers 220, it would be worth an opportunity to buy. Probably would have to use a risk to underneath 212, but it's a $200 stock. So risking $8 to make 16 doesn't seem unreasonable. Plus, it does have a really nice basing pattern here. So, and you don't have to worry about earnings because it already reported. And the last one I wanted to show you is a little bit different. I kind of missed this one first leg up in overstock, so I wanted to watch this one. And we didn't have any kind of mean reversion. We didn't have any kind of 60-day low. But what we do have here is it broke down under the it held the 50-day moving average as this was selling off. And now it's back over the zero line. And it's back over the 200-day moving average. So if it holds here above the 76 level, you do have a decent risk down to around 72. So that's $4. And that means, can you make up to here and possibly higher? Yeah, so overstock is another one that's on my list. Again, make sure you understand your earnings. Thank you all so much for spending this time with me. I hope you got some good trading ideas, and I look forward to being with you again next week. In the meanwhile, you all have a happy weekend, and bye for now.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.